So before we dive in, let's remember that fintech ecosystems are a bit like Wi-Fi network in hotels. Some are fast, some are slow, and some promise you free access. But then you discover there's a hidden cost. Wherever you go in the world, though, fintech is reshaping how money moves and how we argue about fees. So buckle up as we take a world tour of fintech with more air miles and fewer hidden fees. So let's meet our panelists, each representing their home nation's finest blend of fintech, tech, and probably a lot of caffeine at this hour. Please let me invite a local Marius Skuodis, who is a board member at the Bank of Lithuania and a former Minister of Transport and Communications. He's done a lot of work in economic policy, international relations, and central banking. Next up, we have Mr. Yuki Kishi, who is an MD at the Fintech Association of Japan and the CFO at Sustainable Labs. He's done a lot of work in finance, business development, and international fintech innovation. And last but not the least, we have Dr. Sebastian Schäfer, who is the MD at the House of Finance and Tech Berlin. He's a behavioral economist and an entrepreneur renowned for building innovation ecosystems within the financial sector, driving fintech across Germany. Thank you all for being there. Oh, is the screen not working? We don't have the names of the panelists. Wonderful, we have success. So, if we could do a lightning state of play across your three nations, briefly give us a 3-minute elevator pitch, please, from your home country's fintech ecosystem. Who's hot, who's not, and where the buzz is right now. Would you like to start, Marius?
For Marius, elevator pitch early in the morning. It's not the best time. It's better in the afternoon. But a little bit about Lithuania. I was at the central bank 7 years ago, and I spent 7 years in government. When we started to think about fintechs, before it was cool, the idea is very simple and internally motivated. We had at that time a very traditional Scandinavian banks-dominated system. Solid, but not so very innovative one. And it was difficult to attract new players to the market, new banks. So the idea we had at that time, and I remember working at the central bank when we were discussing our strategy in those years, let's try to invite fintechs, and especially payment companies, to create competition internally and to force our traditional banking system to innovate. So the motive was very internal, and we still have it. So what is happening at the moment? We have less than 300 fintech companies, not to count probably, crypto sector entities. We have the largest number of licensed payment institutions in the European Union. This is the fact. And also, if we look at the numbers, so in terms of population, in comparison to the European Union, we have only 1% of the entire population, but every 10th inhabitant of the European Union is being given services, financial services from Lithuania, due to the fintech ecosystem. So this is what is happening, and in general, the ecosystem is growing has been constantly growing. If you look at revenue, if you sum up all payments in general, what has been happening last year. Now regarding, worst trends, what is not so hot. So probably we see the trend that risky business models are running out of steam. And it's not probably only in Lithuania, but it's also globally because of stricter IML requirements and so on, and also crypto companies entering normally regulated financial world.
Thank you. Any examples of who's hot and who's not? Are you allowed to share a few names?
Like two largest players. The latest entrant in Lithuania, which is creating a lot of buzz globally, Robinhood.
Thank you.
I'm Yuki from Japan. Japan itself, from GDP perspective, is still number 3 or number 4 after US, China, and then now Germany is like we are on the same level at the moment. So economy itself is very big, and the financial sector is also very big in Japan. How I see Japan market different from the other market is that in this case, fintech. The word fintech has been around for the past 10 years. But having said that, the fintech in Japan has been seen as not the disruptor, but more from the collaboration perspective. Unlike other markets, like fintech eating disrupting the current ecosystem, but in Japan it's not really the case. But rather, we don't like to have any confrontation. We like to be a very peaceful-minded nation. So in that perspective, and the fact that, of course, at the same time, the traditional financial players are very, very strong, really dominating the market itself. So from the fintech perspective, we had to leverage some of the existing assets and then work together and create something new out of it. So yes, we've seen great collaborations, but this depth of collaboration has, in the past few years, has been sort of getting much larger scales, meaning that before it was, big banks with the fintech players, doing some bit of partnership. But this partnership has now become, the fintech is now part of the big banks now. The big banks, financial institutions are now acquiring like majority of the shares of fintech players, the big fintech players. So, these fintech players now part of the bigger financial institutions, and then they are doing much more wider scales businesses at the moment. It's really coming from like a financial planning app to cross-border payment applications, from like robo-advisor, investing platform. Most of the big names are now part of it, and then trying to reach the larger market.
What are the big names?
For example, speaking from the acquiring side, it's like we have 3 big mega banks: MUFG, SMBC, Mizuho. They are now acquiring some companies like Upsider, which is a corporate bank, a corporate card issuance company. What's the other one? The robot advising company. Wealth Navi is one of the big robot advising company that's been acquired by MUFG. Recently, banking as a service company is being acquired by the SMBC group. So
the big incumbent banks that are taking over fintechs. That's interesting.
But at the same time, the narratives for the fintech side is that they have been fundraising, getting monies from VCs. So what they're hoping, nothing has been executed yet. What they're hoping is that they're thinking about swing by IPO, meaning yes, they go under the umbrella of the big banks, but at the same time, in near future, they're thinking about being public. So that's their sort of plan at the moment.
Thank you, Yuki. Sebastian, over to you.
Well, 10 years ago, I remember it was all about fintechs will disrupt the financial system, and to some extent that happened, and that's good news. If you look at Trade Republic, from Berlin. If you look at Scalable Capital from Munich, just to mention two, you see two interesting companies that manage to scale in the wealth and neo-broker space. And the interesting thing is that actually the established banks are looking into it. And they are adopting more of this digital mindset, or at least trying to adopt more of this digital mindset. So in a way, this is good news. There's another very interesting company from Berlin, Raisin. I don't know if you heard of them, like a platform for deposits and Tagesgeld, as we say, scaled into I don't know how many countries. What is it? Almost 80 billion that they're managing. So these are really fintech success cases from Germany. And now I mentioned Berlin quite a lot, and that's for a reason that in contrast to the more traditional financial center in Frankfurt, you have seen like a lot of clustering of fintech in Berlin. So you have around 190 fintechs, active fintechs in Berlin, compared to around 170 in Frankfurt, Hamburg, and Munich together. So there's a kind of a concentration, but in general, we see a lot of interesting ideas emerging out of Germany. Maybe to close with two observations. That despite the regulator had a hard time during Wirecard to really continue supporting fintech innovation. I think that was really a challenge. And despite COVID, where we saw, in particular in Berlin, where bigger funding rounds stopped quite drastically after 21, and other ecosystems, and we compare ourselves globally, recovered faster.
Thank you. Sebastian, we'll stick with you because that's a good segue into my next question. Regulators, dream makers or buzz killers? How do local regulators help or hinder the innovation in your respective countries? If you can also share examples, you've already shared the Wirecard example, but if there are any other notable ones, Sebastian, and then we'll continue around. Thanks.
I mean, in general, it's rather the latter than the first. It depends a bit on which company, which founder you talk to. So if you're having a good relationship, if you're sticking to the rules, things can work smoothly. But they take time, and of course, I mean, we are here in competition, and Lithuania, for good reasons, is always part of the discussion. Are we going to Lithuania, Luxembourg, or are we trying it in Bonn with BaFin? It is an important decision. And second, you asked for some examples. I mean, look at N26. One of the really promising fintechs out of Berlin that were on a very promising growth path, where like stopped and got a cap on new customers, certainly for good reasons.
There's a lot of internal founder disputes happening, and that was the only fintech that pulled out of the UK, and I had to close my account. The quickest account that I've ever opened using biometrics, and the only company to take it away.
Yes. A very innovative company at the start, and they lost a bit of momentum, you could say. I mean, looking from the outside, which is unfortunate. Seeing Revolut, for example, and others taking the customers and more market share. Here you see that this was certainly also a result of the BaFin interactions.
Yeah, this is recorded, right? Okay, so I can't say anything. No, but still, like the Japanese FSA, the regulators, has been very supportive, fostering this ecosystem. Of course, I mean, before that, I mean, if anyone here, if anyone got emails, letters from JFSA, everyone will be very scared of receiving ones. But now I think they're trying to change the image, the brand. They're also trying to update their branding. in a way that they are here to support you, not here to sort of I don't know how to say it, but yeah, they're really supporting in a way that, for example, one of the examples is that instead of fintech startup approaching to these JFSA, the initiative they are doing is that they are the one actually knocking on the door, say, hey guys, tell me what you guys do. I mean, of course, in very friendly manner. It's really for them to understand, and also in order for them, at the same time, JFSAs, they have their own duties, meaning they have to protect the customers as well as they have to update the ecosystem. So they are really proactively approaching these fintech startups and then trying to understand what they do and then thinking ahead what kind of regulations that needs to be updated in order for the startups to grow faster at the same time and keeping the rules at the same time. Yeah.
Yeah, it's a challenge since I represent the regulator in Lithuania. And it's sometimes, when I'm thinking about this area, it's like being a parent in a family. When you have small children, then you have teenagers, and how to balance being strict and loving at the same time. So probably it's better to ask about your parents when you grow up, rather than asking teenagers, what's happening. To a certain extent, this is the situation. But the recent example, and I think a very good example, it's not about regulator, but the entire ecosystem. Actually, in spring, some of our largest marketplaces, Vinted, for instance, which is a second-hand clothes sharing platform, raised the issue that, these kind of business models, which are low risks, it's basically, you probably don't create a lot of risks. I share my clothes to you and we make a direct payment. They raised the issue they shouldn't be regulated in the same way with the same strict AML requirements as, a payment institution. So we had more than 20 meetings, different ministries, financial investigation service, and so on, the central bank. In 2 months, we had the legislation prepared. It went through the parliament. It was passed. In 4 months, we changed our approach in Lithuania towards marketplaces. I think this is the way how we should be doing.
And that's a brilliant example. Obviously, Vinted is massive. It's a unicorn. It's a success story. So that came with a lot of weight, a lot of clout. But it's a great example, and I think everyone should learn from that.
But it's as nice that in our sector, unicorns created the association. So we have a good partner raising certain issues. It doesn't mean that we will be bended by everyone. But if you listen, you may find that this is the way to go. And now on the European Union level, we raised the issue that probably, marketplaces, these kind of platforms could be even issued a separate individual license with different requirements from the entire financial sector.
Wonderful. I'd love to do a Harvard Business School style case study on Vinted and the regulatory ease. Sebastian?
Maybe to end on a positive note, and this is of course also a part of the discussion in Germany, and we see that also the regulator is starting to differentiate a bit more, treating the youngers or the smaller companies differently from the incumbents for good reasons. And here also being very much interested in having a dialogue. We see it at the House of Finance and Tech. We are fortunate that the regulator is really interested in joining our growth program, being interested in listening to what the scale-ups, what the fintechs have on their mind, and how to support them. So overall, I see that it's a continuous assessment of how to balance stability and innovation.
And I echo that. The UK's FCA, the PRA, the Bank of England, they're endeavoring to move mountains in order to simplify things. It's just that it's taking very long. So, next question. Show me the money. How are investment trends in your specific ecosystems showing where capital's spent? Are VCs showering fintechs with cash? Or is it more like, cap in hand, please, sir, may I have some more? Yeah, Marius, happy to start with you.
Yeah, I think in Lithuania, it's becoming much more difficult. If you look at the trends and when we compare numbers in general, how much startups managed to attract last year in comparison, to the year previously, probably the contraction was of 2/3 of what was before. But this is the global trend, it seems to be. And also, to a certain extent, since we were very successful, so we are returning to the trend line, what we used to have. So I think it's much, much more difficult. On the other hand, the largest players, it seems they have a lot of money and they are investing. So probably we will move to the trend of consolidation when the largest players are going to acquire smaller ones, which are facing difficulty.
You've already said that happens in Japan, Yuki.
Yeah, M&A, yes. I mean, larger ones acquiring the smaller ones, yes, that's for sure. But from VC fundraising perspective, looking at the statistics, it has been growing steadily, like every year, yes, 10% increase in terms of money flowing into the fintech sectors, so which is great. But at the same time, what we are facing is, as a challenge, is the lack of later stage money, venture capital or institutional investors into this field. So we have very great amount in the early stage. There's many funds focusing on the Series A, that level is fine. But when it comes down to sort of Series B or Series C onwards, we haven't got that much money at the moment sitting around. So what, I mean, as a country or as a sort of tech sector in general, what we are trying to do is how can we invite these larger pocket investors from outside Japan, for example. So that, and then good things in Japan is that the Japanese yen has weakened against the major currencies for the past few years, meaning that the value itself has actually gone down. It's much, in the ROI perspective, it's great for investors. So that's where the challenge is, at the same time opportunity that I see at the moment. Yeah.
Thank you, Sebastian.
I mean, if I recall correctly, since 2 or 3 quarters, we are recovering again after really difficult times between end of 21 to 24, beginning 2024, mid 24. So here, that's the good indicator. But along the way, we lost a lot of momentum. You see that investors are going more into profitable business model. This has also changed a lot in the space. Yeah, it's not growth at all costs anymore. It's really about profitability, and some of them turned their companies into very profitable companies, and they will benefit. They will get the funding rounds, and that's what we see. I can echo your view on later stage. I would also say in Europe in general. So in Germany, we have this 50 to 100 million funding gap, Series C onwards, where we see that international investors from the US, from China have to step in or can step in to take over, which is...
Or the Middle East. Even.
Yeah, or the Middle East, which is not so good for the European ecosystem because you would like to see more IPOs out of Europe to revitalize and bring the money back.
Agreed.
So that's a big challenge.
Yeah.
Yeah, but not only for Germany. You see it in Japan and otherwhere, but that's one thing. And maybe to look at some of the sectors, I was pretty surprised to see, and that's on a global level, that investments into wealth tech Investech are actually picking up quite a lot, not only in the B2B space, so infrastructure, but also B2C. That's a very promising sector we are looking into. So everything around personalization, democratization of like alternative assets, but also getting access to the capital markets in general.
Thank you, thank you. Final question for everybody. So we've spoken about the money aspect. Let's talk about the talent pool party. What are you doing to attract and, dare I say, prevent brain drain from your respective countries? Sebastian, should we stick with you and end with Marius? Thanks.
Maybe looking at Berlin specifically. Berlin is a very attractive and international city, so attracting talent hasn't been big of an issue over the last couple of years, and we've seen actually the success and the impact. I think it's now more about keeping this momentum, making it easier to afford housing, making it easier from a bureaucratic perspective for getting visa, helping companies actually to get employees from abroad. I think these are the two main challenges: the housing market and the bureaucracy.
In Japan, the working in the startup ecosystem has become sort of hot place to work for. Previously, these talented people from top university in Japan, they used to work for companies like investment bank, top consulting firms. But now working for startup is also becoming one of their path for these very high talented people. So I think that's good momentum. But at the same time, the challenge specifically for the fintech side is the lack of compliance talents. For those great compliance, they usually stick in working for the big banks. But having, I don't want to say lousy ones, but I mean, for the fintechs, we have to, working as a compliance officer in a fintech company, you have to think about strategically. You have to think, how can we bypass the current laws, current rules? But compliance people tends to be very conservative in general for the mindset, and the good ones still sticks in the larger ones. So how we thinking about how can we sort of bring these great talents into this compliance sector for the fintech? Yeah, that's the bit of challenge.
So we have quite a strong talent pool in the IT sector, which has been growing constantly. I think we are quite strong in compliance, but we need more of those people, especially when companies are coming to Lithuania and when they are growing. So this is the challenge, which we are trying to solve with collaborating, with the companies, with higher education institutions, and so on. The positive trend that over the past 5 years or so, we had a net inflow of people to Lithuania. And Vilnius is actually, if you look at all the Baltic countries, has been the only capital which has been constantly growing with its own challenges, traffic jams and so on. But still, the quality of life here is very positive. And for that reason, yesterday, I think you had the CEO of TransferGo, which moved from London with his family 3 months ago here to Vilnius after spending 10 years or so in London. And he said, when I asked him what was the reason, because last time we met was in London City in his office, the reason was that he has a very young baby. So maybe because of that, he decided to come to Lithuania. So people are choosing, but I think the competition for talent is the trend which we are all facing.
Indeed. And now we're competing with the next session, so I better wrap it up. Thank you, everybody. Very insightful, very entertaining, and enlightening.